If you're wondering where Bitcoin will be in 1 year from now, so by the end of 2022, or in 2 years from now, by the end of 2023, then I think you do ask the right questions. Because that's the kind of time horizon you should look at. Most people are way more short-sighted in crypto. Most people simply look at, where's Bitcoin gonna be 1 month from here, 1 week from here? Can I take advantage of short-term price movements? But I think estimating where Bitcoin will be in the long term, in 1 or 2 years from now, that kind of a prediction can be made with way more certainty. The more we look out into the future, the less random noise we have. The less the market can be manipulated, the less one single whale can move the market. And so it's really an adoption curve. It's really how much does Bitcoin or cryptocurrency for that matter grow over the long term. And that's way easier to estimate. And I think the certainty of these kind of predictions is that high that it might even make sense to use leverage in a smart way to bet on crypto adoption over the long term. I am a fairly conservative investor, but in some points leverage can make sense. And so simply bear with me for a few minutes. I will explain exactly what I mean and how I think it does make sense to take smart, calculated long-term bets. Now this is the long-term Bitcoin logarithmic regression chart. So over here we see several years of Bitcoin data all the way from where Bitcoin was just a few cents to today, where it's multiple tens of thousands of dollars. It's interesting how this model is able to encapsulate almost all of the price movements of Bitcoin's entire history, right? We've always been inside this trend channel, except for this Corona crash over here, where we temporarily went down 30% below the lower band over here. But that's pretty much the only outlier over here, the only significant outlier. And so I think it makes a lot of sense to rely on this long-term adoption chart than trying to speculate, are we going to short-term crash or are we going to short-term rise in value? That's pretty hard to predict, right? We went from the lower band to the middle band, back to the lower band again. So the short-term fluctuations, they are hard to predict. But we can work with long-term expected values, right? And when we zoom in over here, what we can see is by the end of the year, the expected value for Bitcoin is at around 62,000. The upper band is at 148,000 and the lower band is at 25,800. So it looks like a pretty big range, and it's unlikely we're gonna shoot up or crash down to either of those limits over here, but that's simply where Bitcoin historically moves in, right, within this channel. Now here's how this extends. This is now the exact same data in table format. So every single year by the 1st of January, this was the higher bound, the price at the middle line, and the lower bound. So that's for every single year. And then over here, we've got a very low value. So that's now just 30% below the lower bound to give us basically the absolute minimum where we can expect Bitcoin to be at a certain point in time. Now here's the first phenomena to be aware of. Over time, the growth slows down, right? So this is now the growth of the price from 1 year to the next. So the annual growth. And in this chart, we can simply see this by the slope of this curve declining over time, right? This is not a straight line. This is a declining slope. And so the current expected growth rate for Bitcoin year over year for 2022 was 78%, and it's gonna be 75% and 72% in the following 2 years. What's also interesting is how these growth rates, they are not the same, right? The upper band tends to grow slower than the lower band, and that's simply an expression of this trend channel narrowing over time. So we become more and more certain of our predictions. The model becomes more and more specific on where the price of Bitcoin might land in the future. And so at the very beginning, if we divided the price of the upper bound by the lower bound, we had a 55x. So this was a very, very wide trend channel. And then over time, the higher price compared to the lower price, it gets smaller, right? So the relative price difference, it decreases over time. And so in 2022, the upper price is only 5.7 times larger than the lower price. A difference that is much narrower, much less than what we had in the early days. And so this is just a measure of how much this trend channel narrows over time, right? And so at the beginning of 2024, the upper estimate will only be 3.8 times of the lower estimate. And so the real question is, do you believe that Bitcoin over the long term, over 2 or 3 or 4 years, will continue to get adoption? Do you think that this trend line here will stay intact over time? I think answering this question is way easier than estimating whether or not Bitcoin will be up or down 1 month from now. So you can have more certainty in long-term time predictions. And with more certainty comes the possibility of introducing smart levered bets. Because effectively, what do you do with leverage? You're amplifying the price movements, right? When things go up, you earn more money. When things go down, you lose more money. And the nice thing about Bitcoin is that over the long term, it goes up. The expected appreciation over the long term is currently at around 75% per annum. That's the numbers we are currently looking at. And so I think leverage is a good tool, but it's like fire, right? It can be used for very productive purposes, but it can also be very destructive. And so you have to be very smart about this. And it's also interesting to think about how much leverage and debt is emotionally loaded. I mean, think about it. When you buy a house with a mortgage, you can borrow, say, 10 years of your income to buy that house. You can pay down 10% and borrow 90% of the value. And everybody thinks that's the most normal thing in the world. But then on the other hand, when you tell people that you took on a cheap personal loan in order to buy stocks, everybody thinks you're a gambler. Everybody loses their mind. And if you tell them even you took out a personal loan in order to buy crypto, then people will stop listening to you even. They don't take you seriously. But here's where the important distinction comes in. You have to think about what's the basis of your loan. Why do you get a loan in the first place? And what is it secured against? Why can you actually borrow that much money for a house? It's because the house purchase is secured by your income, by your monthly cash flow, say by your job, right? That's why they want to get your salary proofs and things like that. And so as long as you keep your job, as long as you have your regular income and you can service the monthly payments on your loan, as long as that's the case, nobody cares about the value of your house. That's different to loans that are secured by assets. So say when you borrow against your stock portfolio or you borrow against your crypto, because then you can get potentially margin called. Then you are at the mercy of volatility. Then you might lose everything in case it does go down by 80% or so. So you don't want to be exposed to that kind of a risk. Instead, you want to borrow against your regular cash flows. That's what, for example, Michael Saylor has done, right, of MicroStrategy. He takes the cash flows of his company and he borrows against those cash flows in order to buy Bitcoin. He doesn't borrow against his Bitcoin and has to sell everything in case things go down. You want to use those movements to the downside as an opportunity, and you don't want to see them as a potential risk. And so, of course, this is no financial advice, but let's think about it. How can we minimize our risk and maximize our returns at the same time? So first of all, in order to minimize risk, we want to maximize the time horizon, right? Because over the long term, this long-term upwards trend, it beats the short-term volatility. So the longer your time horizon, the safer you are potentially. And I think the minimum long time horizon for doing a levered bet is 2 years. At least right now, at least at the current price we are at right now. Here, let's look at the projected numbers for 2023 and 2024. So in 1 year and in 2 years. The lower band in 1 year is 50,000. So that's pretty much the price we are currently at. The lower band in 2024 is 95,000. Now let's work with the very bearish scenario that we will get a corona-like crash just before the end of 2023, the beginning of 2024. So we go 30% below the lower band. In that case, we would be at 67,000. So it would be approximately 30% higher than where we are today. So that's the ultimate very, very bearish scenario. So you would bet on the long-term growth, you would bet that this trend channel stays somewhat intact. And if that's your thesis and you believe in this, then taking on a loan to buy Bitcoin and sell it in 2 years should work out. The very least you can expect is a 30% gain from here. And the expected gain is more than a 3x. So that's the middle line, right? That's the expected value, the middle of that trend channel. And of course, this is no financial advice, but if you're wondering, should I gamble in altcoins to make a multiple X on my investment? Or should I try to ride the waves and try to buy Bitcoin when it is very low and sell it again when it's very high? At the same time, you get pretty nervous around timing this correctly. Then maybe this strategy is all you need. So let's say you want to buy 1 Bitcoin today, right? Let's say you take on a loan of 50,000 or so. So you're looking at 50,000 and you pay this off over 2 years. Without interest, you're paying around $2,000 every month. With interest, that's probably a bit more. So let's say we divide this by 23. It's good enough of an approximation. So you're not paying more than 2,200 per month to own an entire Bitcoin in 2 years from now. And that Bitcoin is very likely to be priced at least 96K, maybe even 186K. Of course, all of this is no financial advice, but that's, I think, a smart risk to reward. And if you can't afford 2,000 per month, then you can simply calculate this pro rata, right? Maybe you just save 1,000 per month and you've got half a Bitcoin, and you simply divide these numbers by 2. That's, I think, the right way to use leverage, not to buy, say, 3x or 10x levered products on Binance that get potentially knocked out, where you work against the big whales, where you could potentially lose all your money, and where you're also betting on very short time frames. The smarter way to do this is to look at long time frames, to bet on long-term adoption trends, and to not back that loan with the underlying asset, but with your regular income instead. If you enjoyed this video and this kind of different spin on how to navigate the crypto markets, you're likely to enjoy the premium membership as well. You can find that at thebitcoinstrategy.com. Link is also in the video description. There's a chat where you can ask me any questions. There's a lot of tutorial and mindset videos that discuss topics such as portfolio construction or technical analysis. So feel free to check that out. If you enjoyed this video, please give this a like. It will help the channel grow. And if you haven't yet, feel free to subscribe as well. I publish videos regularly. Last but not least, there's also a public Telegram channel, the Bitcoin Strategy channel. We are more than 1,500 people over there. There's another link in the video description. See you next time. Bye-bye.